Hi, we thought we'd make a quick video just to let you know what's happened with the Bank of England today. You may be aware that the Bank of England have increased the interest rate from 0.25% to 0.5%. And again, this is not too dissimilar to where most of us were expecting the rate to be. Part of the reason for the rate change today was to keep up with inflation, as we see the cost of pretty much everything from utilities to labours and parts getting more expensive as we come out of COVID. So it's designed partly to control that. But what it means for people on their mortgages and things, we would see obviously tracker mortgages go up by the standard 0.25%, but mortgage rates in general, we're still expecting to remain low. It's across the banking sector. We were expecting general rate rises on this sort of thing. We would expect it to hopefully now remain around this kind of way. It may go up slightly again. I don't think it will go down. I think 0.5% historically is not a bad place to be, so not overly concerned. More importantly for everybody as well is we're finding that criteria for mortgages, i.e. the appetite for lending, is still very, very good, especially compared to where we were just a year ago when the lenders were finding very reluctant to lend because of COVID, because of furlough, because of grant schemes. As we move away from that, we're finding it a lot easier now to get people mortgages because there's no longer the risk of furlough. There's no longer the grants being provided. So mortgages are actually becoming easier to obtain rather than the restrictions that we're putting on due to COVID. So it's not all terrible news. It's actually quite positive in a way as well. And hopefully, if we can stifle inflation, so the cost of everything isn't going up, then we can start to keep prices down in other areas too. So all in all, it's just a readjustment phase after COVID. And as the government's obviously pulled a lot of the support it was giving previously, and we now have to get back onto our own feet. And case in point on that, just to give you a bit of a case study, had a client in this morning and they knew that they wanted to look to buy and were thinking they might be 5-6 years away given where they are with credit status, earnings, things like that. But we were pleased to let them know that within 12 months, we can have them on the right path to buy their properties. So we overcame things like he was a contractor, and rather than going by his accounts, we were able to go by his day rate. And that meant that we could lend a lot more. And looking at the credit profile, we were able to look at a couple of things that are going to fall off there, or how to manage those in order that they're reported best and that was an affordable way for them while still being able to maximize his deposit at the time they are ready to buy, which left them feeling really, really positive about what they're going to do and then getting themselves on the ladder when they are looking to buy a lot sooner than they were before. And that's based upon the criteria as it is today, and the flexibility that we've got as well. So some good news out there. I wouldn't be too worried about the rate rise today. Is actually a good thing. It just wouldn't appear like that because everybody goes, oh my God, it looks like that's going up too. But don't panic. If you need any more information, please give us a call, drop us a line. More than happy to chat you through, more than happy to let you know how that affects you. And we'll leave our details on this video and on the notes below. Give us a shout. Speak to you soon. All the best.